Hello, everyone. Welcome to Switch Markets Live. I'm Shane Vernier, analyst and trading coach over at howtotrade.com, and this is another installation of our series, our new Switch Markets Live series. We want to welcome everybody to this live stream. We've got folks here from How to Trade. We've got clients from Switch Markets. We've got folks popping in over the internet that are just finding our live streams today, and that's fantastic stuff. Absolutely great to see everybody. Remember, these are more of a Q&A style live streams. If you have any questions at all, be sure to leave them in the live chat. Be a little bit patient with me, though. I'm monitoring about 4 different live chat threads, so I will get to your question as soon as I can. Today, we're doing our futures Forex and stock market strategy session, and what that's going to be really made up of is I've got some trade ideas that I'm going to put out there. I've also taken a good look at the news feed, and I think there's a few things that we need to be aware of. And then also I'm going to go back and I'm going to recap the last 2 days of inflation data, some of the biggest numbers we've seen in a long, long time. And I think that we're in for an interesting month. We're in for an interesting June. I like the price action. I like what's happening right now. The dollar is getting absolutely crushed. That means that we're going to get to trade the FX majors with a little bit of authority. So I'm very, very happy that the dollar's on the move. So many times in the Forex, so many times do we see the dollar just absolutely flatline. And when it flatlines, it makes it really tough because we need a couple of things as retail traders to make money. All right? We need volatility and we need market depth. If we have those two things, we can make money trading anything. But when the market doesn't move, it gets very difficult. And a lot of times in our Forex markets, they just don't move. So I'm definitely happy to see the dollar on the move. There's some great trades out there to be had in the FX space. I'm sort of monitoring everything. Dave's Apple, what's up? Good to see you, Dave. Welcome over to How to Trade. And remember, if you guys are looking to trade at all, head on over to switchmarkets.com. Get yourself a live account. And see some folks over there watching at Switch Markets, so don't be shy. I know there's a bit of language barrier with many of our clients. Unfortunately, I only speak English, and I barely do that well. I barely do that well. So, interesting week. Let's go ahead and get out to the news cycle to start with. I want to cover a few stories here relatively quickly. As far as, the news source that I use them all. I use CNBC here because it's sort of the industry standard and it's free. So if nothing else, you could clock on cnbc.com and take a look at what the mainstream's pushing on everybody today. I find a lot of really instruction in the stories that they push. And what I mean by push is, listen, the editor comes down. They got a room of writers there. The writers write. The editor says, okay, we're going with that one, that one, and that one, and we're going to put those and feature those for the day. So I did a little bit of work in the writing industry before I joined the How to Trade team. So I have a little bit of an idea about how it works. But I'll tell you this, I'm always interested to see what these guys push because the narrative can really tell us a lot about what we believe sentiment could potentially develop into. And we're going to go and talk about that in really deep depth here in just a minute. In any case, what's the big story here for me? There was a plane crash today, which absolutely horrible tragedy. There was one survivor, and the gentleman jumped off the plane right before it crashed. It's absolutely unbelievable story. They're going to make movies about that. Unbelievable stuff. But if you're affected by that, my apologies and thoughts and prayers go out to everybody that was involved. But definitely not a good thing. Tariffs. We're talking about tariffs and inflation. The reason why we have that story is because we expected inflation to be a lot higher due to the trade war, and it's not. So I'm going to talk about that as well. Jay Powell is the Fed chief. Trump's all over him today, called him a numbskull, urges an interest rate cut. He's definitely not friends with Jay Powell. So a lot going on there on the monetary policy front. And this is the big one that we're going to start off with U.S. oil. Trump wanted an Iran nuclear deal fast. Now he may get a military confrontation. So let's go right out to our U.S. oil chart. Now, I had a trading idea out earlier this week. I've been in and out all week. Sort of had a little bit of vacation this week. It was a good week for it. But you definitely saw some big-time action in that U.S. oil market. And it has to do with Iran, Israel. It has to do with Iran and the United States. There's a lot of talking heads out there in the news that believe a hit on Iran is imminent from Israel. Potentially, maybe even the U.S. will start bulking up forces there as well. Now, what we did see is we saw the Trump administration pull a lot of U.S. workers out of the region. And that's telling us that potentially we're on high alert over there. We're sort of expecting the hit. And what that means for WTI crude oil is any action against Iran or any widespread escalation of the war between Israel and Hamas, Israel, Iran, the United States, and everybody, any escalation in that arena is going to drive crude oil to the moon. And we're seeing that. I mean, right now you've had a big month for WTI crude. Now, we had a trade idea out earlier this week where I was talking about buying 65s. It was a great trade. If you guys got that one over at How to Trade, congratulations. You definitely want to get that. Dave, F19, good to see you, Dave. But if you got that bid from about $65 right in here, that was a 38% level. Man, that was a banger. It was an absolute banger and one of those trades that you really wanted to be a part of. The news cycle really helped you to the long side. it really helps you to the long side. So you definitely want to be aware of what's going on in the world. Your geopolitics can really send a market absolutely just careening out of control, maybe, if you're a dramaticist. But if you get on the right side of those moves from your technical levels, you can crush it. You can absolutely crush these markets. Now, I had another trade idea out today, and I sort of want to break that down for you in real time here. What it is essentially, it's the dollar Swissy. So remember, with your MT5 platform, you just go ahead and you pull it up, drag and drop. Relatively simple. Now, this is a monthly chart. Now, this was not based on a monthly chart. What we're going to do is we're going to go ahead and dial that down to a daily. And what do you have? Well, you've got an interesting type of a dynamic, because right there, you've got the low. You've got this month's low, which is a spike right there in April, and now we're sort of coming off. So I'm going to go ahead and break this one down for you in a little bit greater depth, definitely, as we got over on TradingView. Now, this volume spike right over here, your spike low, your low for 2025 is going to be formed on April 21st, and that's going to be a low of right around 80.39. So that's absolutely huge. That's a big time zone. That's exactly what I'm looking for when I'm looking to get into a market that's trending. Now, there's no doubt that the U.S. dollar Swiss franc is trending south. The Swissies destroyed the dollar this year. It shouldn't come as any surprise. And the reason why is, well, a lot of geopolitical angst. A lot of people go into the Swissy as a safe haven, but also the U.S. dollar is absolutely on its knees right now. It's getting hit. It's getting hit, and it's getting hit hard. So if, in fact, we're going to play the U.S. dollar and we want to buy a U.S. dollar pair, we better darn well have a great level. Now, this level right here is not a bad one. It's not a great one. But it's not a bad one. What this will do is this will give us an opportunity potentially to bid somewhere down around that 80.39, that yearly low that we're seeing. And we're going to have an opportunity maybe to see a little bit of compression between that zone and 80 even before potentially reversing up. I like this trade. I would say it's a relatively low risk trade, but it's definitely one that's on my radar, that's for sure. So we put that out on how to trade earlier today. For right this minute, there's a couple of observations on this chart we need to make. Number one, this is a nice swing low. It's April's low. It's the yearly low, okay? Right here, we're coming off big. We've seen another big move today of about 1%. That's a big-time move, and we're trading about 81.21. So we're still, about 70-something pips off of our entry point there. That's going to give us an opportunity to sit back, to sort of wait. We don't have much going on tomorrow, so we're going to be able to actually sit and wait and see if the market comes to us. So this is a big part of my game plan and my strategy. What do I want to have happen? I want to see this trend continue. I want to see it base out right around that yearly low, which is going to be right just north of 80. And then we're looking for that compression. Then maybe we trade back up to 81. The idea there is to take the money out and to not really get too worried about picking a bottom, because I don't believe the bottom's even close to being in for the Swissy. No way. What can we really do, though, if we step in at the right level? We can reach in and we can scalp that thing for 33 or 50 pips. I believe that's a 50-pip trade. We can step up and get that bounce relatively easily without really much having to happen. What I mean is we don't have to be right. If we aren't right and we're still getting paid, that makes us a real good trader and real tough to beat. So remember that. You don't always have to be right to get paid. You don't have to know exactly how far the market's going to go, or you don't have to get in on a market reversal to make your money. You don't have to do that. You just have to get good trade location, which if we're bidding this market, that's a pretty darn good trade location. We're buying near the bottom of the year. The Swissy typically does a lot of this rotation before you get a breakout. I expect a lot of rotation down there. And if we don't and we get swept out, then we get swept out. But I expect to win that trade, and I'm watching that one relatively closely. The other thing I'm going to put out is this right here. Take a look at the volume. Back on the 18th of April, this is major volume. This volume right here was the catalyst for this compression and then this break right here. Take a look at the volume. Since then, we haven't even been close to those kinds of volumes. What does that mean? It means that we don't necessarily, unless we get a huge spike of volume, you're not going to get that big sweep lower. More than likely, this chart's going to look just like this. And all we have to have happen, I want to be very clear about this, all we have to have happen is the price just to sort of do this. And I think that's what's going to happen. Now, do I know? No, I don't. Price could easily come in and sweep us low, but that's sort of the risk we take as traders. That really is sort of the risk we take as traders. So if you don't want to risk anything, you got to be careful in the markets, because what happens is you get too conservative. Just be aware of the risks that we are taking. Manage them wisely. 1% to 3% on any given trade. I'll look the other way if you want to put 5% down. Don't go any higher than 5% or you won't be around very long. It's the honest to God truth. If you're a trader and you're talking risk management and you want to be in the game for a long period of time, you've got to be able to manage your per trade risk, your per trade exposure. Now, what your per trade exposure means is how much of that risk capital are you going to put on a given trade? Are you looking to really make a lot of money? If you are, you typically need more money to do it safely. Now, if you've got a small amount of money and you want to try to make a big amount of money, then you're going to be taking big risks. That's just the way that it is. There's only two ways to make big profits, guys. You either get in on big trends, big runners, and take these huge profit targets, which, by the way, have a very low success rate. You got to be very careful. I'm going to tell you an industry secret. Your 1 to 5s and your 1 to 10 payoffs, risk versus reward, very low, very, very low. Low probability of success, very low. I do business on the other side of the ledger. If I want to make a lot of money, I just build my leverage up. I put more down, and I look to get in and get out, take my 1-to-1s and move on to the next one. I get what I'm going to get front and center. That means I take bigger positions. Now, you got to be very careful doing that, because if you don't have the money to take bigger positions, you're going to get hit. And when you're going to get hit, it's going to hurt. And it doesn't take very many major hits before your account's underwater and you just can't apply the leverage anymore. So very careful. I would say between 1 and 5%. 3% is probably a pretty good guideline. 5% is aggressive. Anything over 5%, and you're a gunslinger, and I hope you win. I'm pulling for you. I really am. All right, everybody, let's go ahead and talk a little bit about some fundamentals today before we get back into some price action and trade ideas. Welcome to the Switch Markets community. This is sort of, I would say, what is this, our 5th or 6th live stream here on Switch. Very excited to be here. Was looking for a little more interaction out of you guys. Feel free to write anything you want in the live chat there on YouTube. Perhaps it's offline or not working. Sometimes that happens, but ask me whatever you like. More than happy to help. If you're having problems with your trading, just let me know. Just let me know, and I'll do the best I can. So you're more than welcome to contribute to this particular live stream. Remember, we stream pretty much every day over at How to Trade, so you can check out howtotrade.com if you want more of these streams. But we will be really launching this Switch Markets Live, really getting into it with all the tools and the things that we want to bring you. That's going to be developing here relatively quickly over the summer. Now, what I do also want to point out, you'll notice that I use TradingView. I use TradingView on my live streams, and I know that confuses a lot of you. It does, because you don't use TradingView. Well, we're getting ready to really get into this Pine Connector. Now, Pine Connector is a service here where you're going to be able to link your TradingView right to your MetaTrader 5. That means your MT5, the platform that a vast majority of you use at Switch Markets, the Switch Markets MT5, you're going to be able to do your analytics and things on TradingView, and then you're going to be able to place your trades and get live alerts on MT5. I think it's fantastic. I think it's an absolutely great way to trade. And this is one of those that I think that over the years, as technology develops, you're going to see services like Pine Connector are going to become incredibly important. So they've got a 14-day free trial over there. You can go over and kick the tires if you want. We're building some content out on that service right now. So you're going to have the ability to be a TradingView trader and get your signals, symbol mapping, anything you really need. You can put them all on MetaTrader 5 and get your executions done that way. So pretty interesting stuff right there. Now, as far as MT5 goes, I'll be the first one to tell you that I am not an MT5 expert. I don't know it all. I know a few things about it. I know how to, execute a few different kinds of trades. For instance, we always sort of get, everybody wants to see gold. So like if I wanted to add gold right here, I would just type this in and go ahead and hit the add button, and that would go ahead and populate this market on my market screen there, my market watch screen, and then I'm just going to go ahead and drag and drop that right over there, and that's going to get me up and loaded for gold. So if I'm looking at gold right here, you'll notice I don't have any indicators on there at all. No indicators on there at all. One thing I always like to do, let's say I'm looking at a daily chart, just as a basis, one thing that was very popular that we did on the howtotrade.com YouTube channel was a basic 9 EMA. Now, most people want to trade a 9 EMA on a 1-minute chart. We're going to do that in just a minute as well. But let's say you want to add an EMA right here. You just go right down to moving average. You go indicators, trend, moving average. You give that a click, and you go ahead and dial this one in for your exact periodicity. That's a 9. We want to use an exponential moving average, and I go ahead and I like my dark blue as being that, and I also want to be able to see my lines, so I like my lines thick. All right, let's go ahead and put a 9 EMA on the chart and see where we're at. Okay, interesting type of a viewpoint here. We're bullish. We're completely bullish. We broke above that 9 EMA right there. We broke beneath it last week, and now we broke above it, and we're really heading north. So if we were, in fact, wanted to make potentially a more aggressive trade, an intraday trade on gold, I want to make my mistakes to the top side of the market. I had some range numbers up there I wanted to sell today. We didn't get there. You see the very, very tight action that we've seen over the past several hours in the market. But this 4-hour chart is a pretty good one for gold. Now, if I was going to trade this, I'd say, okay, do I want to buy right now? I'd say, well, our 9 EMA, you pretty much were long here. You were long right in here. Maybe you were long back in here, back on the weekly open. You could have done something like this. This was right on the weekly open, right there. Potentially, you could have taken just a swing trade to the long. But let's say I want to be aggressive right now and build a trade idea. I'm a big fan of Fibonacci retracements. Something like this can really help you out. Now, we made a video on the 9 EMA strategy using Fibonacci retracements to really nail your entry point. And one of the things that I sort of left out of the video because it's very complicated and it was tough to find some good examples was I wanted to find the intersection between my Fibonacci retracements levels and the 9 EMA. Now, you can see right here that 9 EMA is rising with price action. It looks like it's going to intersect with the 50% level. If, in fact, that does happen, then we'll have an opportunity potentially to take a bid, and we're going to be taking that bid from right in this zone right here. See where my crosshairs are, you're right around what, 33.68, maybe 33.70. That's pretty good stuff. That's pretty good stuff. So I'm watching that closely. I think that we have an opportunity potentially there to trade, and not just trade, but take a real high probability trade. Now, we're going to go over what's left for the rest of the week. We're going to talk a little bit of inflation, but what I would recommend on this gold market, I don't think you want to get caught short. I think the only time I'm looking at maybe taking a short scalp is going to be right up from beneath 30 to 3,500, and even that's going to be on a real short leash. So we're watching this closely. This could be a pretty good intraday trade, though. If we get this pullback, I would probably, you could take 38%, which is a very aggressive trade, about 33.75-ish, maybe 33.76. And that one's coming our way right now, it looks like. But I would wait for a deeper draw. I would absolutely love to attack this zone between my 50% and my 62%. I think we have a real chance there potentially to make a few bucks. So that would be one example. And I know, you guys are way more in tune with your MT5 than I am. But that right there could be a potentially nice way just to get up and running with MT5. Add the market you want, throw a technical indicator on there, and just start breaking price action down. It's not too difficult. It's not too difficult once you get the nice strategy in the way that you want to trade. Once you nail that, then you're going to be in pretty good shape. All right, everybody, we got some fundamentals that we do need to cover today, and I'm really looking forward to getting into some of the talk about inflation. Now, there is a lot going on with inflation. Some of it good, some of it bad, most of it bad. I don't know if any of you have gone to the supermarket lately or gone to, for instance, we took a little bit of time off and went and saw a concert, stayed in a hotel, and it's been a while since I've done those things, at least around my local area, and I was blown away by the prices. I was blown away by the prices of everything. Inflation is still very, very high, and we're just going to be honest here. It's not coming down. There's nothing they can do. The inflation's entrenched. The high prices are here to stay. So if you're waiting for them to come down, you're probably better off just trying to figure out a way to make more money to make the difference up. I know that sounds sort of crass, but it really is the truth, guys. I hate it. Believe me, I don't like it any more than you do. I think the savings, a lot of the folks that have built their life savings and haven't been invested in a proper fashion have really lost a huge amount of their savings to inflation. Prices are just ridiculously high on everything from hotel rooms to food and beverage to cars to real estate to all of it. So right now, we're sort of in a holding pattern with inflation. I don't care what the numbers say. It's still ridiculously high. It's entrenched. It's not coming down. And I don't really know what they can do about it. So we're getting used to, I hate the term new norm. I hate it, but we're getting used to it. So right now I'm going to go over exactly what happened in the last 2 days of inflation figures. There's been a lot of people that are so excited about it. I'm not. And then we're going to talk a little bit about how to intraday trade, maybe a little bit of crude oil, and then we're going to look at some futures. And I've got a Bitcoin trade that I want to point out right here that was pretty good, and it's going to be pretty good to us for the near future. Okay, here we go. All right, as you can see, Monday was just sort of a news day. The weekend news cycle has dominated everything. We're talking wars. We're talking cats living with dogs. We're talking complete chaos. Nobody knows what's going to happen, and this news breaks every single weekend. Be very, very careful if you're trading over the weekends. I'll talk more about that tomorrow on our How to Trade live streams. Now, Tuesday was quiet. There really wasn't much going on. Trump came out, talked a little bit of tariffs, but didn't really destroy the markets, not that I saw. Wednesday was CPI, huge figure. Today was PPI, another big inflation figure. And tomorrow, there's really nothing on the docket. There's really nothing there, just no donation Friday. However, with the Trump administration, anything can happen at any given time. They break news every other hour. It happens. It's really difficult to account for and trade, but the markets are getting used to it, and that's good for us. That's good for us. Tuesday, Wednesday, Thursday, you guys know my psychology if you've ever watched any of my live streams. Matter of fact, the folks that watch these are tired of seeing this slide, but I show this stuff almost every week because I want everybody to be dialed in on the same page psychologically. This is my own approach to the markets. It doesn't have to be yours. For me, 15 years of experience, I pretty much know when I can perform well and when I can't. Tuesday, Wednesday, Thursday gives me an opportunity to get in there and be aggressive and trade my plan. I'm looking to make money during that 72 hours. I want to make money. If my strategy says trade it, trade it. I'm looking to build my P&L and build my trading account and try to achieve my financial goals. I do that Tuesday, Wednesday, Thursday. Monday is about game planning, and Friday is about preserving momentum. So when I say no donation Friday, that means if you've made $1,000 this week, you put 500 of it in your pocket. I want everybody that's made money over the last 4 days needs to take some of it home with them for the weekend. No big losses on a Friday. It's too hard psychologically to sit there all weekend on a loss. It's too hard. I did it enough times to where I don't do it anymore because it bothers me. It wrecks my weekend, and I can't have that. I cannot have that. All right, the state of U.S. inflation. These are the numbers that came out yesterday. Now, these are the core CPI and the CPI figures. Let's take a good look at them because there's a few things in here that I'm not seeing being pointed out. I've seen a lot of talk. A lot of experts are telling you all about CPI. I'm going to give you my take on it right now and why I believe what I believe. Now, core CPI came in at 0.1%. That was beneath expectations in the previous release. CPI right there, month over month, came in at 0.1%. That was beneath expectations in the previous release. So, a pretty good read, right? This is the raw CPI index. This is the CPI data itself. This is the raw index figure that we use. This is the number that's calculated from that basket of goods and services. And this is all I need to see. This is a 45-degree angle. This is a 45-degree trajectory. This inflation that we had last year, already the growth of inflation that we're seeing this year is making last year look like peanuts. Now, even though we undershot expectations, remember, I mean, we came in good. There was a lot of reason for people to be excited, right? They're going to be excited about, okay, 0.1, but you're still growing. In this raw data, this core CPI index, we're still growing relatively rapidly. So we're up 326.85, up from 326.43 previous, and you can see that's sort of right where we're at. We're right up where we really just don't want to be. We want to see this raw data plateau. You want to see something like this October, November, December. You know, you want to see something like last June, July, August, and instead, it's just been an absolute explosion. Now, a lot of that has to do with government spending. A lot of it has to do with just lax monetary policy. But our inflation is a problem, and it's not coming down without something dramatic. It's not coming down. So today was PPI. Now, the PPI is the producer's price index. The consumer's price index definitely will show us what we're paying like for goods and services, just for a basket of goods and services. The PPI is from the producer's point of view. This is what they're looking at for raw materials. These are some of the prices that they see on the other side of the counter. I view PPI as being incredibly important. Yes, sir, good to see you. Yes, sir, hey. I view it as being incredibly important. I view it as being one of the things that we really need to understand from really a broader perspective. It's not just about CPI. It's not just about the prices you pay. It's about the prices the producer pays and the prices that they're passing along to you. It's not the same thing. It's just not the same thing. So let's take a look at the core PPI here. Core PPI came in at 0.1% month over month. That was well beneath expectations, but above the previous release, which was downwardly revised. You've also got the base PPI. 0.1% came in beneath 0.2, but also broke to the top side of those expectations. So what does all this mean? Well, I mean, what it means is PPI is not quite as bad as CPI. You'll notice the chart, and I want everybody to understand these charts because you don't have to be an economist, you don't have to be a rocket scientist to understand the concept here. This was very steep, ugly inflation from a producer perspective that developed during 2024. Realistically, 2025 is not so bad. Now, the reason why a lot of people are really scratching their head over this chart is because with the tariffs and the trade wars, we expected PPI to go way up, and it didn't happen. It's not happening. Now, consumer prices here in the States, they're high. They are. But this PPI sort of gives you a little bit of, okay, we're off all-time highs. We've sort of seen a bit of a retracement. We're just sort of flat in here. Now, I've always said if they could get a tourniquet on the inflation, then they'll have an opportunity potentially to make a little bit of progress in this department. But I will say that this is encouraging. This is not. This means they can't stop consumer prices. Producer prices, a much better story. So if you're an optimist, if you're saying, Shane, I'm optimistic, I go, good for you. It's good to be an optimist. I don't mind optimists, really. I know a few of them. It's okay to always look on the silver side, or the silver lining, the cloud's silver lining. There's nothing wrong with that. The problem is we have to be realistic. We can be optimistic about what's going on, but what we don't do is we don't walk around laughing like an idiot all day. We've got to be realists. We got to be real about what's happening here. The bottom line is this. Inflation has not come down, and we're talking about getting involved in another rate cut cycle that's going to send prices even higher. It's going to send things like real estate and vehicles and basically everything you can imagine even higher. It's a bad scenario, guys. It's a very dark scenario here for the economy, the global economy, but also here in the United States. It just is. There's going to be nice things out there, but it's all going to cost you an arm and a leg to get into. So you're going to have to make decisions on what's important and what isn't. Is buying the new car important this year? I wanted one. Doesn't look like I'm going to buy one this year. I'm going to hold off, probably buy one next year. But the house, can you go buy a house? Most people aren't even entertaining home ownership anymore, and that was something that was a foregone conclusion 20 years ago. I know I owned a lot of them. It was easy. It was relatively affordable, and the financing was there. It was relatively easy to get up and run and buy in a house. And this situation that I'm seeing right now, this is an ugly scenario. So prices are going up. Can the rabbit ever be put back in the hat? I don't believe so. I don't. I think that we're in the new era, the post-COVID era, and that is everything costs a lot more. And the reason why is the global financial system was flooded with cheap capital. That's why. All right, I said futures and Forex. This is an interesting chart that we're looking at right here. This is my 9 EMA strategy. 9 EMA strategy with RSI confirmation. It looks like we're going to get an opportunity to trade this right now. Okay, so we're going to have a buy order. We've got a buy markets, what I want right now. We've got about 40 seconds. Now, I'm going to walk you through this strategy relatively quickly. All right, walking relatively quickly. You've got a bullish break. There's your 9 EMA. Our RSI was in oversold territory, means that was beneath 30. We're going to go ahead and go for it. We're going to go ahead and take this long trade now. We're going to take it right on this bar close. We're going to get a bar close above our 9 EMA. We're coming out of oversold territory. We're going to get an opportunity. This is going to be just a flat buy market order. I'm going to send one lot deep here on gold futures. All right, here we go. We're at 3401, 34019. All right, let's go ahead and take it. Okay, there's our execution. Now, the question becomes, what are we looking for out of this trade, and where's our stop loss? Stop loss is easy. You've got two options on your stop loss. Number one, you can put it beneath the swing low. That's what I highly recommend. Number two, you can put it right beneath your trigger bar here. You can put it there. I think that's too tight. We're going to put it right beneath that swing low. Now, what's our profit target? I love market structure. Something like that. So we just bought in right there at 34.019s. Our stop loss is going to be down here at 33.98.6, and our profit target's going to be right up there at 34.05. So we're going to have a pretty darn good trade on our hands that's a little bit better than a 1-to-1. So we're going to go ahead and shoot for that. Top of market structure is going to be our profit target, and we're going to go ahead and see if, in fact, we can get a little love to the top side. I like that order block right there. I think we've got a chance to get this done. I've been watching gold futures all day. We've been rotating between 34 and 34.10. We should be able to get this. Time of day. Is it a great time of day to be doing this? It's not a bad one. We've got good price action there. There's lots of participation in this GC market. Okay, now we're starting to break positive. Now I'm starting to feel a little bit better about it. 34.05 is going to be our magic number. Now we just need a few more ticks, and we're going to be in decent position. We're looking for that 34.05. If we get right up in there, probably going to just reach out and take the money. This so far has been a positive trade for us. It's been good bullish price action all day long. Gold is up about 1.75%. I trade gold futures. I know most of you trade the XEU USD. We're going to look at that in just a second. But we've got an opportunity here on this trade. Now, one contract, that's very doable. Now, you guys, you could trade those on pretty much all your prop accounts or even a real account. That doesn't take much money to trade that. I think the intraday margins are like $1,000, so that's an easy trade. But we're going to go ahead and let this one simmer. Now, we had a similar trade like this we executed last week on the U.S. equities indices. It blew up and then came back and took us out. If you're going to be a moving average trader and you're going to go with it, you almost just got to stick to your guns and take the good with the bad. And that's why you have to trade things that are A, volatile, and B, on the move. Right now, it's a pretty good time to be taking this trade. I don't necessarily know if it's a slam dunk. Price is sort of blowing up in our face right now. We're hovering around break even. Still in bullish territory, though. We're above that 9 EMA, but we are really looking for that price action to take us to the next level, which is up there right around 34.05. We'll wait and see what happens. Let me see, guys. I got a whole heck of a lot of messages here. I'm right behind here. Just let me see. DLE, covers and keys. I just joined Switch Markets. I'm seeing MT4 and MT5 being used. I've been using TradingView for years. Can I continue using that instead of MT4 and MT5? Absolutely. DLE, good question. We're in the process of building a way, and believe me, I've been using TradingView for a long time as well. But this service that I've already promoted it once, but let's go and check this out. This is Pine Connector, DL. So you've got Pine Connector rolling here. What Pine Connector can do is it can go ahead and link your TradingView, your automated trading, your manual trading, doesn't matter what you're doing on TradingView. It can link your TradingView right to your MetaTrader 4 and 5 platform. So if in fact you're using TradingView to trade, and let's say you want to just go ahead and be placing your trades through your Switch Markets account on MT5, that's absolutely what you'd be looking to do. So Pine Connector can hook up your TradingView. It can hook up your TradingView to your MT5 and give you a chance to trade. So we're really in the midst of some very serious talks here. If you want to learn how this Pine Connector works, it's got a free 14 advanced trial. You can go ahead and hook that up maybe on a demo and see exactly, get comfortable with the functionality of it first. We are building some content out where we're going to be go ahead and be launching that relatively soon. So that's going to be the answer for you. It's going to link TradingView to MT5. It's going to be seamless, like an API bridge, and I'm excited about it. I've been a TradingView guy for years. I do all my analytics on TradingView, and I know most of the traders at Switch are using MT4, MT5. So this will be a very good thing. We'll get an opportunity to get up and running with all these different technologies. I think it's a pretty good thing, pretty exciting time to be over at Switch. All right, guys, we do have a couple other trades that I do want to scope out. If there's any markets you'd like me to look at, go ahead and just shout it out, and I'll get on it. But I hope that answers your question, DLE. Let me see. Yes, sir. I've been having some awesome orb trades this week on the dollar yen. Knocking on wood, I haven't had a losing trade this week. That's how trading goes. I mean, that really is how trading goes. I mean, we went through our trade ideas over at How to Trade through January, and I didn't lose a trade for the whole month. And that's just the way it is. Bob, good to see you, Bobby, a member of our How to Trade community. But sometimes you just get hot and you don't lose. I mean, I've been on a bit of a streak myself. I haven't lost in a couple of weeks. So that's pretty good. There's nothing wrong with that. Enjoy the good, enjoy the bad, enjoy it all. Just manage your risk and you'll be just fine. That's what I would say. Okay, this is a Bitcoin. This is a chart. We talked a little bit about crypto. I would say we've talked a lot about Bitcoin, and we've been doing that for quite a while now. A basic strategy play here. This is a good look at our 9 EMA, 20 EMA crossover. And this is our coded version that we made a video over at How to Trade Com YouTube. Learn how to code it, get the scripts, get everything you need. I'm more than happy to pass those along. But the code is simple. When we cross under, we get a big purple bar. When we cross over, we get a gold bar. And the area between these moving averages is shaded. That's our trend indicator. So the wider that shade is, the larger that shade is, that tells you the stronger the trend is. And then you can definitely just get the crossover indicators in there as well. It's a very simple way to trade. This was interesting. You had a sell signal here. Well, we knew 100,000 was going to be a big deal. So your spike low right there was right around 100, 426, 104 and a quarter. I mean, we bounced off of that like a rocket ship. Now we're back up at 108. I'm still incredibly bullish Bitcoin. I don't really know that you can go wrong by buying it. This right here would have been your bid signal, so you would have been long from right around 105. You'd already be up about $3,500. If you wanted to go long right now, I don't necessarily hate it. I don't hate it. And the reason why is you can work a Fibonacci retracement from that spike low to a spike high, and look at that beautiful 38% right there, right around 106. That was a fantastic pullback zone, went right into the middle of that shaded area and took the long. That's good stuff. So probably by the time we talk next week, there's a couple of levels that will be challenged. The first one is going to be 110. I don't really see any way around that. You can see we've got sort of a nice 112 high right there, and then a liquidity sweep, and then we're coming off of that, coming down a little bit, and then we're getting rotation right there, right around 110. So I'm looking at 110 closely as being an area that we're probably going to test here in the next day or so. But a broader picture is going to be right up here at 125. what you're seeing right now is some technicals really develop. Now, you're going to have to go with me on this one because it's not the most beautiful picture that I can draw. I'm not the best artist. I will say that. I'm a trader. I'm not an artist. But this it's not the best. You could even go there or maybe even go there. I would go there, right to that all-time high at 112. If anybody can guess what I'm building. It's a cup with handle. I would love 3 or 4 days of compression right here between about 105 and 110. Fill this cup, fill this handle in, and then you're looking for a bullish break. Then you're looking for something like this, really to take off to the top side. And I think that that's going to give us an opportunity to get in on that bid. This is a daily cup with handle. It's not perfect. It's not pretty, but you've got sort of that crossover there. You've got a cup with handle. Now you're looking to bid this thing. And I think that there's a lot of folks in the market in this position where they've taken the longs. They definitely just piled in again at 100,000, and now they're looking for 125 to the top side. I think that's potentially what we're looking at. Now, if this doesn't develop, and it may not, I mean, what we're looking for is maybe just a few more days in there. That'd be great. Sometimes you get that big breakout down, though. And then if that happens, you scratch the cup with handle and you go back to the drawing board. But I like this. This is a pretty good formation. A lot of technicians would say, Shane, that's not a cup with handle. I'd say, yeah, it is. It's essentially a double top is all a cup with handle is. It's a top and then a pullback and then another top. We're seeing that setup right now. A potential bid somewhere on a breakout above 110. That would be really difficult for me to beat. So I'm watching that closely in Bitcoin. I think that Bitcoin is just ripe. I believe it's ripe for the taking. We just got to wait and see exactly what happens and how it develops. That's for sure. Okay, everybody, let's go back and check in on our 9 millimeter trade, our 9 EMA trade. And you can see this is EMA trading, guys. This is EMA trading. We were in oversold. We took the bid. We had a nice rally up here. And now what are we down? About 15 ticks or 13 ticks. It's not the end of the world. But this does look to me like we could definitely break down what's happening in this market. We've been coming off for quite a bit here. I don't mind trying to pick the bottom of this using the 9 EMA. We know exactly where we have to get out. But is it going to work for us? Well, we don't know yet. We know that we took a buy on a day that we're up about 1.75%. I still have some confidence that we're going to rally here. But the big question is how high do we go? Boy, I'd be surprised if we don't check out 3405s. I really would be. But we could easily get stopped out down there at 33.98.6. That's just sort of the way it is. I still think this market's got some life in it, though. I'm going to go ahead and stick to my guns and just let this play out. And remember, if you're a 9 EMA trader or a technical trader at all, you're going to have to stick to your guns. I know it looks good up here, and now it looks bad, but you've got to stick with your idea. The basic premise of this trade, 1 minute chart, is that the best time frame? It's tough. It's tough trading 1 minute. There's no question about it, but you'd be taking trades all day long, a lot of trades. You're going to win some, you're going to lose some. But what we're looking for here is this swing low to really set up and be the bottom of this market for us this afternoon and potentially get that runner somewhere up into 3405. We're not dead yet, but I don't feel real good about it. I wanted to see that initial big rush. We did get it up to about 3402. I wanted to finish the job right there. Now we're back at 34 even, and we're just sort of milling around. We could easily get stopped out before this market reverses. That's just part of it. That's part of trading, guys. That's risk. That's why you dial your risk in and you manage it aggressively. That way one of these trades doesn't just destroy your account, and this one right here doesn't look good, but still got some life to it. All right, everybody. I want to go ahead and thank you for watching today. This is our Switch Markets Live series. We're going to be back next week with a couple of more. I believe there's going to be more and more of these scheduled. So if you're a Switch Markets customer, be sure to keep an eye on that YouTube channel because you will in fact be able to watch these live streams whenever they go. Also, our newsletter. We put a newsletter out for Tuesday's session. Be sure to be checking your email inbox for that if you guys want access to the newsletter. It's got just a write-up on what to watch for the week, and then also a pick of the week. You're going to want to go ahead, open up a Switch Markets account, even a demo account, and get on that mailing list, and you'll be getting the newsletter each and every week emailed out. Go out to you via email, give you an email blast, so you'll never miss one. But I'm excited to be working with How to Trade and Switch. I think that's when we put them together, it could be a real powerful team. I think Switch Markets has the platform that can help you get into the market and trade from a position of strength. And over at How to Trade, we have an awful lot of education. I've been over there for about 3.5 years now, 4 years. We've done a lot of videos, a lot of educational content. So if you're struggling over at Switch and you haven't seen how to trade, go on over and check out how to trade. You can send me a private message, click on my picture, send me a PM, and I'll get back to you if you have any questions at all. All right, everybody, you're absolutely welcome, DLE. All right, guys, I'm going to go ahead and sign off. Tomorrow, we're going to be back at How to Trade. We're going to be over there trading the U.S. Open. We're probably going to be rocking one of those 9 EMA trades. I'm watching our gold closely. We're in compression right around 3,400, but we're starting to tick a little higher. I think we got a chance at that one. I'd be surprised if we lose. I feel good about it. All right, everybody. I'm going to go ahead and sign off. Bart, absolutely, from New Zealand. Welcome, welcome. We got a truly global community. That's one of the things that I love. I'm a sort of a fast-talking American. I live up in Dillon, Montana. I live out in the country, pretty much where nobody goes, but that's how I like it. So to see folks from New Zealand, we had some folks in from Asia, Africa. Really, it's a truly global community. If you have any questions at all, you be sure to ask me, and I'll do my best to answer. All right, ladies and gentlemen, that is a wrap. You have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.